Are we live?
Yes, you are live.
Thanks. Good evening, everyone. Welcome to the 9th Town Hall being held by ZI Private Limited in the restructuring of ZI Private Limited and the WazirX platform. My name is George Gui. I'm a director with the Crow team, who are also financial restructuring and financial advisors to ZI. Joining me, we have Michael Levine, who is from my team at Crow. He's a senior manager assisting me on this matter. And we also have Nishal Shetty, co-founder of the WazirX platform. Thank you for joining us. This 9th Town Hall constitutes the third online webinar in the ongoing restructuring of unsecured contingent liabilities of ZI Private Limited. And this online webinar also acts as the scheme meeting in the revote process that's currently underway. So before we kick off, I want to provide some color on the structure of this webinar with respect to the revote. So this online webinar is scheduled from 8 p.m. Singapore time, which is also 5:30 p.m. India Standard Time, and will last for 2 hours, up to 10 p.m. Singapore time or 7:30 p.m. India Standard Time. At 10 p.m., officially, the revote window will open. The revote window will last for 5 business days from 10 p.m. SGT, which is 7:30 p.m. IST today on the 30th of July 2025, and will end on the 6th of August, 10 p.m. Singapore time, 7:30 p.m. IST. So effectively, we have 2 hours on this town hall to get through the key changes and amendments that have been made to the scheme, to the 12 March scheme, which I'll provide a bit more detail on later. And we're going to try to be efficient with the time here because we've got slides and we have also got a live Q&A at the end of the session. So the structure of this session is going to be as follows. I'm going to give you a flavor and executive summary of what has changed and how it impacts scheme creditors of ZI Private Limited, a quick overview of the scheme timeline, and then more detail on the key changes made to this amended scheme. My colleague Mike will then jump in on other scheme terms and estimated recoveries, which remain substantially unchanged relative to the previous scheme, which we'll be referring to as the 12 March scheme. At the end, I'll come in and provide some information on the disclosures and instructions on how to vote. Keep in mind that the voting window opens immediately after this town hall. Lastly, we will be going into a live Q&A discussion with participants joining this Zoom meeting, being let in 1 or 2 at a time from the waiting room. You'll then be able to ask questions live of me and Mike and Nishal, and we'll do our best to answer your questions live as well. Now, we have a limited time here, and while we will do our best to answer as many questions as possible, it's important that we keep to the time schedule so creditors can log off from the watching the town hall on YouTube or from Zoom and go on to the WazirX platform and KIS platform for the voting. So to that extent, we ask for your cooperation in keeping your comments or questions short, and we'll do our best to answer as many as possible. Please keep in mind that this is not your only avenue to ask questions. If you're not able to ask your questions here, or you're not comfortable asking your questions here, you can email the contact details at the end of the slides for questions posed to WazirX or voting related questions posed to Crow Issuer Services, who are administrating the voting process. Throughout this deck of slides, we will be highlighting certain changes. Primarily, section number 1 and section number 3 will talk about the main changes that are in the amended scheme relative to the previous scheme, 12 March. We're also labeling changes sections where no changes have been made to the scheme, and you will see in little boxes a little blue box that's labeled no change. Where it is labeled no change, we are referring to the fact that no change has been made to the scheme in relation to that section. If you have been following this process closely, you will see some slides that are fairly similar to slides used in the previous town halls, and no change on the slide doesn't mean that there are no changes whatsoever on the content of the slide. Some editorial changes may have been made to make the slide read a bit better, but the substance remains unchanged and the scheme remains unchanged. That's important to note. So let's jump into the exact summary. The next slide is fairly wordy, but I'll take you through it. It's important we get that context. So this scheme has been put forward for a revote, which is why we are doing this third online webinar and why we're doing this revote window that opens immediately after. In our view, this scheme is still the fastest, fairest, creditor-approved and legally binding resolution to crypto balances, with potentially higher recoveries to scheme creditors. Now, a bit of an update on the scheme process. We actually completed the claim review and dispute process previously in March 2025, and the scheme was voted on by scheme creditors like yourselves. And this scheme actually garnered an overwhelming majority support, both in number and in value, with 93% of creditors present and voting in support, and almost 95% in value of creditors present and voting, supporting the scheme. We ask you to come back and support this scheme as well, because as I will soon explain, this scheme remains substantially unchanged from the perspective of a scheme creditor and how the scheme creditor will get recoveries. But before that, let's go into a bit more context. Following the previous completion of the vote, the company, or ZI, applied to the court to seek the court's approval and sanction of the 12 March scheme, which was previously voted and approved by creditors. On 4th June, however, the court actually declined to approve the proposed 12 March scheme, citing some issues with potential legalities of the scheme implementation and potential disclosure issues as key concerns. The company then subsequently applied for and obtained leave of the court to present further arguments to substantiate the basis for the 12 March scheme. And this also included proposed amendments to the 12 March scheme to account for the new Financial Services and Markets Act, the FSM Act, which kicked in Singapore on 30th June 2025 in respect of digital token service providers. These proposed amendments to the 12 March scheme intended specifically to address the court's concerns about the legality of the scheme's implementation under the FSM Act, among others, and also to address the disclosures that the court wanted to see. More details to follow. On 16 July 2025, following the presentation of the further arguments, the court set aside its 4th June order and allowed a revote to be conducted based on the amended scheme. An amended scheme, which we have since sent to creditors as part of the notice that went out previously. This amended scheme, with capitalized A on the amended and capitalized S on the scheme, also includes new disclosures, and ZI's moratorium was also extended until 16 September to facilitate this revote. This third online webinar will explain the key changes in the amended scheme, and it will also explain the updated timelines, how the key changes affect creditors, which is not much at all, and how to vote. It acts as the scheme meeting under the variations sought and approved by the court to conduct this revote. Eligible users, scheme creditors, will be able to cast their vote securely via the Crow Issuer Services platform, KIS. This is itself accessible via the WazirX platform during the stipulated voting period, which starts at 10 p.m. Singapore time, 7:30 p.m. IST this evening, immediately after this third online webinar, and closing after 5 business days at 10 p.m. SGT, 7:30 p.m. IST on 6th of August. The basis of this scheme has already been provided to all scheme creditors along with the notice of this meeting. we urge all platform users and scheme creditors to read and refer to the amended scheme, which has been circulated together with the explanatory statement dated 12 March 2025 from earlier. On top of that, as part of this revote process, we have also done up what is known as the explanatory statement addendum, which is dated 23rd July. And this should be read in conjunction with the explanatory statement dated 12 March and the amended scheme. If you need, on this third online webinar, we'll be going pretty quickly over the sections that of the scheme that remain unchanged from the 12 March version. And if you need more information on that, where I'll refer you to the previous online webinar, the second online webinar, or the 8th town hall. We previously held this posted on YouTube. The link is still in the WazirX YouTube account. The slides have previously been sent to creditors. Basically, that will help you as navigate the WazirX website and the app to understand your allocated share of the rebalanced net liquid platform assets, or NLPA, also known as the rebalanced portfolio on the WazirX website. Please note that this, due to the limitations of time, this third online webinar will be summarizing the key changes and what remains unchanged. Ultimately, the amended scheme is the document that will form the legal contractual basis between company and scheme creditors if the scheme becomes effective. And the scheme will become effective upon the occurrence of three criteria. First criteria is the revote passes along the relevant voting thresholds. That is to say, support of at least 50% in number and at least 75% in value of scheme creditors present and voting in support of the scheme. That's one. Next, the court will have to sanction this creditor-approved amended scheme. And third, and only after creditors have voted to approve and the court has sanctioned it, will the company be able to file the sanctioned court order with the regulatory authorities. It is only once these three steps have been achieved that the scheme can be said to be effective and we can commence the implementation of the proposed restructuring. There are a few steps there. We'll start the vote immediately after this, but it's important to note that not all the timeline is within our control. We are doing our absolute best to speed it up, and I'll get into a bit more detail later during the timeline slide. For now, let me just jump over to this slide. It's meant to be simple. And the key thing to note about this amended scheme is that the amendments made to this scheme do not change the recoveries to scheme creditors. Whatever was proposed previously in the 12 March scheme is still, in terms of recoveries and timeline to receive recoveries, is the same, with the change in timeline only due to the differences in the start of the implementation date. Now, if this amended scheme is approved by scheme creditors and is sanctioned by the court and becomes effective, scheme creditors will still receive the first distribution within 10 business days of an effective scheme date via the WazirX platform. That does not change. In this first distribution, scheme creditors will still receive the tokens shown in their rebalanced NLPA page or rebalanced portfolio page on the WazirX platform. This remains unchanged. What else remains unchanged on the recoveries front? The company still continues to commit to the same level of profit sharing with scheme creditors and the distribution of any recovered illiquid wallet assets to scheme creditors. That is also unchanged. Fundamentally, the key amendments to the scheme are being made to adhere to address the court's concerns about the legality of the scheme's implementation by ZI Private Limited under the new FSM Act. And ultimately, the changes do not affect what creditors, whether the way that creditors interact with the platform to get their distributions. All of the changes, whether it is ZI carrying it out, where ZI was proposed to carry out previously, and now Zanma is proposed to carry it out, that's all on the back end. Ultimately, creditors do not see or feel any of those changes when it comes to logging onto the WazirX platform to withdraw the first distribution, or having recovery tokens issued to them, or having recovery tokens purchased back from them upon further recoveries. None of that changes from the perspective of a scheme creditor, and that's why we think if you had, as a scheme creditor, previously supported the 12 March scheme, we strongly urge you to support this scheme as well, because it is substantially unchanged from your perspective, and the key changes here are intended to address regulatory concerns and operate at the back end. If you did not support the scheme previously, we strongly urge you to reconsider your decision, because in our view, this scheme continues to be the most expedient and effective way to a comprehensive restructuring and access to distributions for scheme creditors. Now, on the second half of the screen, we also have some new disclosures, which are a combination of what has been directed by the court and what has been provided in the interest of transparency. I provided some detail in respect of Zanmai Labs Private Limited, which now plays a more extensive role in the amended scheme. We also have details in respect of the legal proceedings against Zetai and or Zanmai. More details to follow in the slides. And details and disclosure on the rationale for the usage of 17 January 2025 as the reference date for the rebalancing. Now, we have from very shortly following the completion of the rebalancing, the company has updated each individual user's WazirX rebalance NLPA page to show the tokens that will be released to scheme creditors in the first distribution if a scheme is effective. Now, none of these have changed. Okay, let's be clear. The amendments don't change any of that. What this clarification and disclosure on 17 January is a further explanation on why the date 17 January was used as the pricing date and reference for the rebalancing. This is not entirely new. It has been presented comprehensively to the court before, and the court has directed Zetai present this to creditors as part of an additional disclosure as part of in this revote, which is what we are doing. These key changes are all substantially set out in the amended scheme and the explanatory statement addendum, which were previously circulated. If the scheme is difficult to read for some of you, I would advise you to have a quick look at the explanatory statement addendum, which has a section showing the specific parts of the 12 March scheme that have experienced amendment, and it shows what it was like in the 12 March scheme and what it is now like in the amended scheme side by side, so you can compare it and read more effectively. It is also in this explanatory statement addendum that the new disclosures are set out, not just in the body of the addendum, but also in the appendices. You are strongly urged to read all the relevant documentation here, the amended scheme, the explanatory statement dated 12 March, and the explanatory statement addendum dated 23rd of July. Let's talk about a quick summary of the principal amendments to the 12 March scheme. Why were they required? Why do we have to propose these to the court? Primarily to address the court's concern about the legality of the scheme implementation, particularly in the context of the new FSM Act licensing regime that came into effect on 30th June 2025 and was actually only clarified by the MAS, Monetary Authority of Singapore, in early May 2025. Sorry, early June 2025. The key amendments basically introduce involve the Zanmai Labs Private Limited, also shortened to be Zanmai India, as taking a larger role in the implementation of the scheme, where previously only the role was restricted more to Zetai. Under this introduction of Zanmai, basically Zetai will transfer the operations of the cryptocurrency-related services to Zanmai India, which will take effect from the effective scheme date. Zanmai India will then be the entity to carry out the operations of the platform to facilitate withdrawals from the platform of the distributions by scheme creditors, and this includes the first distribution. Worth emphasizing that to a creditor like yourself, the process is entirely unchanged. You'll still be you'll still see the your WazirX account receiving a distribution on the WazirX platform. You'll still have to adhere to the KYC requirements, which are now clarified in the amended scheme. and also the applicable terms of the platform remain. And I'll get into a bit more detail on that. There's also a key amendment in the form of the flow of the surplus funds. And that's because Zanmai India Zanmai India is a subsidiary of Zetai, and surplus funds from Zanmai India, which is now which under the scheme will be facilitating both crypto to crypto and crypto to INR. Surplus funds will be flowed upwards to Zetai by declaration of dividends. And these surplus funds will be used in the computation of the profit sharing. More details later, but long story short, the profit sharing does not change in percentage. It does not, the only thing that changes is behind the scenes, the way the funds are flowed from Zanmai India to Zetai for the use of profit sharing. And ultimately, this structure is in place to address the risk of non-compliance with the regulatory regime in Singapore. And right at the bottom of the screen, none of these change the recoveries that scheme creditors will get from the first distribution. It does not change recoveries that scheme creditors will get from distributions after the first distribution. And just take the first distribution as an example, the way that the first distribution is run from the perspective of scheme creditors, the tokens that are being distributed to them on the rebalance NLPA page or the rebalance portfolio page, and a 10 business day timeline of the first distribution following an effective scheme date, none of these change. These amendments do not change any of that from the first distribution. This is if you have followed this process previously, you would have seen this table before. Substantially, this doesn't change. The numbers don't change. Recoveries don't change. The only change here is in blue, and that has to do with the overall timelines. And this is because timelines have shifted given the time that has elapsed since we have gone through the previous round of voting, hearings, sanction hearing, further arguments hearing. All of that has resulted in some delay. But ultimately, in our view, the scheme still results in higher recoveries on a much faster timeline than the hypothetical alternative liquidation-based case. It is the fastest. I will go into a bit more detail on timeline. We expect this if we get support from creditors on this amended scheme, and if we get the court sanction, we'll be able to commence the first distribution sometime in September or October 2025, about 2 to 3 months compared to the alternative in about 2027 under a hypothetical liquidation. But why September, October? This is why we go into the timeline section, which is next. Bit of a table here. Let me take you row by row. The date on which the court allowed the revote was 16th of July. And on the 23rd of July, we issued to all scheme creditors the documents that I had mentioned earlier. The notice of the revote, the amended scheme, the explanatory statement addendum, and the explanatory statement dated 12 March 2025. All of this was emailed to scheme creditors on 23rd of July. And that gives scheme creditors enough time and notice to attend and watch this third online webinar, which is right now in the third row. It's from 5:30 p.m. IST or 8 p.m. Singapore time, and for 2 hours. And even if you didn't manage to catch this, right? If you're not here right now, this third online webinar will stay on YouTube. The slides from this third online webinar will be shared after the online webinar, and that's because the second voting period lasts for a period of 5 business days immediately following this webinar. So creditors who are not able to watch it live can still watch it a day or two after, make their minds up, and come in and vote. The second voting period commences at 10 p.m. today, Singapore time, which is 7:30 p.m. today, IST. And it lasts for 5 business days until the 6th of August, 2025, 10 p.m. Singapore time, 7:30 p.m. IST. During this period of time, you may, as scheme creditors, exercise your right to vote on to vote on this amended scheme. Please note, if you had voted previously, you will need to come and vote again. We strongly urge you to come back and vote again, because it is the outcome of this vote which will be decisive in the amended scheme. The voting results from the previous vote will not have any bearing on the support for the amended scheme. Now, what happens after the second vote, the second voting period, this revote? Basically, we will go through a substantially similar process as previously, where we will submit the voting data to the independent assessor, Alvarez and Massal, for verification on the 7th of August. And it'll take a few days to verify the votes, tally it up, confirm it, calculate it, and they will issue a voting verification report, much like what they did previously. And this is expected by the 14th of August. By then, by then we'll be also in a position to update the updated list of creditors, which is on the WazirX website, which shows line by line in an anonymized fashion for every creditor. How did they vote in this revote period? Did they not turn up, or did they support, or did they oppose? All of this is done in the interest of transparency and exactly the same way as we did previously. Now, on 18th of August, we'll be issuing a notice to all scheme creditors, which contains the results of the vote and how creditors may view a list of that list that I just mentioned, the updated creditors list, as verified by the independent assessor. Now, if the results of the revote ultimately are in support of the amended scheme and creditors have met the relevant voting thresholds, the company will file an amended summons and affidavit in support of the sanction of the amended scheme on 21st August 2025. Now, then the natural question would be, if that's 21st August, why are we talking about potential first distribution in September or October? The reason is that once we file the amended summons and affidavit, the court will still need to hear this application for sanction, and before the court can hear it, the court is likely to provide scheme creditors the opportunity to write response affidavits to our filing, and an opportunity for the company to respond to scheme creditors' affidavits, all part of allowing creditors the ability to communicate and communicate to the court any concerns or support in respect of the scheme. Right? And beyond that, the court also has to schedule a hearing. So when it comes to this timeline beyond the 21st of August, this is substantially outside of the company's control. We have pushed for as expedited a timeline as possible, but beyond this, it is subject to the court schedule. And I think it is worth noting at this point that the court has indicated its willingness to expedite to the extent possible from their end as well. So the court has scheme creditors' interests in mind on timeline wise. But ultimately, it'll be down to the court. We think September or October would be a realistic timetable, and we will do everything that we can to shorten what you see on screen within our ability, and try to get this done sooner rather than later. One thing is clear though, that voting period is not going to change 5 business days from the time that you see on screen. And that's to ensure that creditors have enough time to watch this, to read the documentation, watch this recording, and make an informed choice on the voting. So this next section is on key changes to the scheme. Basically, it's in a bit more detail what I explained earlier. Previously, it was the executive summary. This will have several slides outlining in more detail. The first one is a comparison. First 3 slides of this section is largely in respect of the first distribution, which is a key concern for many scheme creditors. So on the left-hand side, under the gray box that says 12 March scheme, is the certain characteristics of the 12 March scheme, and on the right side is the amended scheme. Down the center of the screen are the criteria that we are assessing these 2 schemes on. So this is a bit of a comparison. Let's talk about the first one, distribution method. So much like the 12 March scheme, basically there's no change to the 10 business days of the post-effective scheme date that the first distribution will be carried out. There is a clarification for the amended scheme that the first distribution will be made by way of deposit into a scheme creditor's WazirX account. and that account will be operated by Zanmai India. So that's a change. Now, what about the first distribution token denomination? Basically, it's the same thing. The company shall distribute to each scheme creditor under the first distribution in the respective source token denominations. Another way of saying that what you see on the rebalance NLPA page, the rebalance portfolio page, those are the tokens that you will get if the scheme is effective, and you will get that in the first distribution. Now, withdrawal conditions. Previously, we specified that scheme creditors may withdraw the first distribution subject to applicable terms and to legal and regulatory approvals. This has been clarified. Now, the withdrawals are dependent on KYC compliance, and this is set out in Appendix B and the applicable terms of the platform, which I'll provide a bit more detail on later. Some clarifications on the fees and deductions. Basically, the platform may deduct fees and admin costs associated with withdrawals. There are some additional clauses on the role of Zanmai India right at the bottom of the screen. Basically, Zanmai India is going to be facilitating the first distribution and subsequent first distribution, the withdrawals of the first distribution, subsequent distributions and subsequent distributions and withdrawals facilitated by Zanmai India. And this will be done via the execution of a deed poll by Zanmai India. There are also clauses that govern the transfer of the crypto to crypto operations to Zanmai India. And lastly, it is Zetai's obligation to ensure Zanmai India's compliance. Now, a bit more detail on the steps. What does all this Zanmai India and transfer mean? Bit of a flowchart here. Let's take it from top left-hand corner. Step 1. Basically, this entails a transfer of operations and the signing of a deed poll. So firstly, Zetai will transfer crypto operations to Zanmai India with effect from the effective scheme date through an operations transfer agreement, the OTA. This OTA remains subject to the outcome of the confidential dispute resolution between Zetai and Binance. And once that's done, or approximately concurrently, Zanmai India will execute a deed poll to assume the obligation under the scheme to facilitate withdrawals from the platform with effect from the effective scheme date. So basically, Zanmai India is assuming the obligation to facilitate withdrawals, including that of the first distribution. Then the platform will be operated by Zanmai India to facilitate withdrawals of these distributions, and this will be in compliance with the FSM Act. What's next? That's just the transfer of operations. Next is step 2, transfer of the crypto, the bottom left-hand corner of the screen, and the actual first distribution. So before the first distribution, Zetai will transfer the crypto from Zetai's wallets, omnibus wallets, to Zanmai India omnibus wallets, and provide Zanmai India with a list of scheme creditors and amount and token quantities to be credited to each WazirX account of scheme creditors. With this, Zanmai will have the rebalance NLPA that it can distribute, and the specific and granular instructions on a creditor by creditor basis, how much of the rebalance NLPA has been allocated to each scheme creditor. So what this means is that Zanmai India will be in a position to facilitate the first distribution and the subsequent withdrawal. And Zetai will effect this. Zetai and Zanmai will effect this first distribution by way of deposit into the scheme creditors' WazirX accounts. With Zanmai India operating the platform to enable withdrawals, scheme creditors can also provide the necessary trades and conversions to withdraw in crypto or INR, which brings us to step 3, the withdrawal of the first distribution. Basically, Zanmai India will open a platform for withdrawals, including having received instructions and crypto to facilitate the first distribution. It will make the distribution into the WazirX accounts of each scheme creditor. And then the scheme creditors will be able to withdraw. And there's a little star on the withdrawal method selection over here. That's because it remains subject to KYC and applicable terms of the platform. Now, the rebalance NLPA can be withdrawn can be processed in one of 3 ways. One is a direct crypto withdrawal on chain. Two is a crypto to crypto conversion before a direct crypto withdrawal on chain. And lastly is a crypto to INR conversion, which will result in a transfer of INR into the creditor's bank account and then withdraw in INR. And ultimately, all of this results in the first distribution withdrawal. So there's more detail on this, and that's in the next slide for details on conversions for withdrawals. There are a lot of words on screen. I'm going to go through line by line. Ultimately, the full detail of all of these tokens that are being highlighted as either delisted or tokens that require conversion prior to withdrawal, the list is all in the explanatory statement addendum. Look in the appendices, it's there. Okay, so delisting, the first two rows basically talk about tokens that have been disabled and delisted, or tokens that will be disabled and delisted prior to the first distribution. So there were 11 token denominations of Rebalanced NLPA worth about 13,000 US dollars that were disabled and delisted. And because they've been disabled and delisted back then, withdrawals are not supported. And scheme creditors holding these token denominations will instead be receiving the equivalent in a stable coin and be able to directly withdraw this stable coin subject to KYC and applicable terms. Now, quite some time has passed since 12 March 2025, and a further 13 token denominations will be delisted prior to the first distribution. The value of these tokens is approximately 1.4 million US dollars. The platform will facilitate withdrawals of these tokens manually, right? Scheme creditors can reach out to customer service to get manual intervention to help withdraw these tokens, even though they have been delisted. Now, there are 9 token denominations that are not supported for withdrawal due to technology integration reasons. The value of these tokens amount to about 34.5 million US dollars as at 17 January. These tokens are not supported for withdrawal directly in their original token denominations, but they are going to be available for trading on the platform when Zanmai India reactivates it. So scheme creditors with exposure to these tokens can first convert these tokens to a supported crypto token, or they can convert it to INR before making a withdrawal. And lastly, there are 102 token denominations called Rapid Listing Initiative tokens, RLI. RLI tokens can't be withdrawn in their existing denomination because they had a subject to this limitation so that it could be quickly listed and traded without making allowances for deposits and withdrawals. There's about 81 million US dollars worth of RLIs. And what is an RLI gets refreshed from time to time. If a token is listed as RLI at a time when a scheme creditor wants to make a withdrawal, you can't make it in that RLI token denomination. So in order to extract the value of those rebalanced RLI tokens, scheme creditors will need to either convert the tokens to INR or convert the tokens to another supported non-RLI token before making an on-chain crypto withdrawal. The list of these tokens is extensive, and there's no time to show these tokens on screen. In the interest of efficiency here, I will direct you to the explanatory statement addendum for the full list of tokens. Now, surplus funds. Basically, earlier I mentioned the dividend format for repatriating funds. This slide talks about that in a bit more detail. Let's start from the left side of the screen. So Zanmai India is going to be, under the amended scheme, going to be generating net profits. Sorry, it's going to be generating revenue and incurring costs in the execution of 2 kinds of businesses: the crypto to INR business and the crypto to crypto business. Meanwhile, if a new business is commenced, it will be under a new subsidiary, and then that new subsidiary will generate revenue from this new business and will also incur costs from the new business. Now, Zanmai India and these new subsidiaries are both subsidiaries of ZI. So what's the way that the profit sharing is expected is going to work in the scheme is that the net profits will be calculated at both Zanmai India and a new subsidiary if the new business is commenced. Basically, you'll run the computation will be run of revenue minus the operational costs and applicable taxes, and cash set aside to meet 12 months of operational expenditure and 6 months of capital expenditure at both Zanmai India and a new subsidiary. And this will form the net profits of Zanmai India and the new subsidiary. Now, worth noting on the net profits, this not net profit computation from the crypto to crypto business will only be run if the contingency resolution has occurred and there is a final determination that ZI owns the platform. The confidential dispute resolution process with Binance over the ownership of the WazirX platform remains ongoing and remains subject to confidentiality. So this, if it is found, if it is determined that ZI owns the platform, that's when the net profits from the crypto to crypto business will kick in. Now, that's at the Zanmai, the operating level of Zanmai India and the new subsidiary. So the net profit computation is calculated and it is flowed up to ZI via dividend distribution that is set out as a term of the amended scheme. And at ZI, the same computation will be run to set aside cash to address administrative costs, operational costs, taxes, 12 months of operational expenditure, and 6 months of capital expenditure. Once this computation is run, that effectively converts net profits to net company profits, which you see on screen on the right-hand side here. And then basically, the question will be asked, how much of this net company profits will be shared? So basically, the answer is if 30 million or less has been used to purchase recovery tokens, then basically 100% of net company profits will be shared with creditors. And if more than $30 million has been used as a milestone amount to purchase recovery tokens, then 50% or half of net company profits will be shared. Now, just for avoidance of doubt, none of this changes the commercial outcome of what profits are being shared with creditors. And this is because ultimately in the 12 March scheme, this 100% profit, 50% profit sharing, this entire structure here remains unchanged. And so does the entire structure of the computation of how much profits can be shared after accounting for cash aside to address costs and a runway of operational and capital expenditure. None of these changes. All of these changes are structural in nature and behind the scenes. For scheme creditors receiving distributions through the purchase of recovery tokens, the numbers don't change. The value that you receive in the recoveries from the amended scheme does not change. I cannot emphasize this enough. This is behind the scenes, but in the interest of disclosure, we are putting this inside the explanatory statement or detail. We're explaining it to you at this online webinar, just so scheme creditors can make an informed decision on the voting. But ultimately, commercial terms do not change for scheme creditors. Recoveries do not change. It is substantially the same scheme from the perspective of how much scheme creditors get and when scheme creditors get it. All right. I'm going to hand over this next two sections on other scheme terms and estimated recoveries to my colleague Michael. It's worth noting that these sections are substantially unchanged. You're going to see little blue boxes that say no change. Where you see a little blue box that says no change, the scheme has not changed or been amended in respect of those points like recovery tokens or forensic efforts. Some of the content on the slide may have changed relative to what was presented previously, but these changes are editorial in nature. They do not actually represent a change in the underlying scheme, which is the contractual document between company and scheme creditor. Now, we'll keep this section high level because we have actually explained this in quite a bit of detail previously already. I'll refer you to the explanatory statement dated 12 March 2025. I'll also refer you to the YouTube recording of the second online webinar, or Townhall, in which we went into quite a bit of detail on these terms, and also the slide deck for that previous Townhall. So I'm I'm going to hand over to Mike. Why don't you take creditors through quickly? And if you guys have any questions about it, whether on things that have changed in the amended scheme or things that remain unchanged, we're more than welcome to ask them in the live Q&A towards the end, or send over your queries to the WazirX team in the email set out at the end of the slide. But for now, Mike, over to you.
Thanks, George. So the first additional term of the scheme is around the issuance and purchase of recovery tokens. So as George just mentioned, this is the way that ZI and the platform will facilitate the net shared surpluses and how these will be distributed to you. So, as previously mentioned in the 12th March scheme, and which remains unchanged, the company and the token issuer will issue recovery tokens on a pro rata basis based on each scheme creditor's approved claim in proportion to the aggregate approved claims. The recovery tokens will then be repurchased on a quarterly basis, or when milestone amounts are met. And if the milestone amount exceeds 10 million, then there will be a recovery token purchase event. So this will happen within 1 month. And it's worth noting that the scheme creditors will have to why am I viewing your slides, George?
Let me unshare. Why don't you share yours, Mike?
2 seconds, yeah. Oh. Okay. Can you now see the correct slides?
Yep.
Okay. Apologies for that. So, as I was saying, the issuance and purchase of recovery tokens will happen on a quarterly basis. And within 1 month of each recovery token purchase milestone, the company will procure the token issuer to offer to purchase the recovery tokens. It is worth noting, as the same as the 12th March scheme, that scheme creditors must actively opt in to accept the purchase offers. And distributions will be made to the platform, to the user's platform accounts in stablecoin, cryptocurrency, or otherwise directed in applicable procedures of satisfied milestones. So the trading functionality and purchase price determination for the recovery tokens remains unchanged. So no value will be ascribed to the recovery tokens on issue date. And then at each recovery token purchase milestone event, the purchase price will be calculated on the mark-to-market value of the illiquid platform assets. And the illiquid platform assets covers the illiquid platform wallet assets and also the stolen assets that were valued, as at 17th of January 2025 in the 12th March approved scheme. The adjusted price will then change based on the value of those tokens as at the point in time, and will be adjusted for the previous milestone amounts and the number of recovery tokens in issuance at that point in time. So we won't go through this worked example in detail, and this just sets out how the mark-to-market value of the illiquid wallet assets minus the aggregate milestone amounts divided by the total number of recovery tokens in issue will effectively derive the recovery token purchase price. The total quantity of RTs to be repurchased will then be your percentage or your aggregate claim percentage of the recovery token purchase milestone amount divided by the price that's determined. We can answer this. If there's any questions on this worked example, we can go through them in the Q&A. So the recovery token purchase price and the recovery token will, milestone amounts are based off of future net profits, and then also any recoveries of the illiquid assets and stolen assets. So the Kroll have formulated a recovery strategy to be applied, assessed, and revised on an ongoing basis for the stolen token recoveries. And the stolen token recovery strategy is to trace and freeze USDT balances, which is a continuing and ongoing effort with law enforcement agencies and the cooperation of Tether. We have commissioned, or ZETI and the company has commissioned a first phase report to enable legal counsels to assess the recovery chances via litigation. And then upon the first phase report, there'll be litigation efforts based on legal advice from counsel to pursue claims against other counterparties who are involved in facilitating the cyber attack and subsequent dissipation of stolen assets. Likewise, for the illiquid wallet asset recoveries, the 18.2 million illiquid wallet assets comprise tokens from the control of Binance, the WazirX tokens that to be airdropped by Binance, and tokens that are held on third-party exchanges where withdrawals are suspended. So again, there are recovery efforts being pursued, which will be pursued in a measured and cost-sensitive manner, assessing recovery probability, timelines, and quantum to optimize recovery for scheme creditors. Now, as mentioned in the 12th March scheme, up to 10 million of the USD 30 million cost reserve to fund the recovery strategy was foreseen, which is obviously subject to approach and potential recoveries. So there was an amount of money set aside, and that amount of money may be spent in its entirety, or it may not be, and that will be subject to the scheme manager and the board's assessment based on legal opinions and professional advice as to whether that money is best spent to pursue the recovery of stolen or illiquid wallet assets. As part of the scheme, and this remains unchanged, there will be a recovery report submitted every 3 months by the company to the scheme manager, and the scheme manager will provide a copy of this to scheme creditors so that you may understand and provide quarterly updates as to the recovery efforts and likely future recoveries. And then 3 months before the 3-year prescribed period ends, the board and the scheme manager will assess the recovery options available and may jointly recommend an extension requiring a special resolution vote by scheme creditors. So this would be if there were ongoing recovery efforts, the scheme period may continue just to pursue those additional recoveries. The other part of future profits, and as George mentioned, the net future surpluses is through the new business and existing business. So shortly after the effective scheme date, within 10 business days, the first distribution will be made on the WazirX platform, as obviously still subject to KYC and applicable terms of the platform. And the one thing to highlight here that has changed to adhere to the FSM Act is that the operations for the crypto to crypto trading business will now be undertaken by Zammite India. So Zammite India will reactivate the platform to allow creditors to trade crypto to crypto and crypto INR pairs to facilitate withdrawals of the first distribution. Shortly after commencing of the scheme, 3 months after the effective date, the associated entity is planning to develop a decentralized exchange that replicates the user experience of a centralized exchange. And the net shared surpluses of that DEX will also be provided to scheme creditors for the period of 3 years. And then 6 months after the scheme effective date, the one other change to the 12th March scheme is that the other features on the platform, so for an OTC desk, staking and futures, are being assessed to be facilitated by Zanmai India. So Zanmai India will now be the entity that launches a specialized OTC desk that will develop the opportunity for customers to stake their assets using smart contracts and also to trade in futures. So from the user experience, nothing changes, and these are all the same features that were part of the 12th March scheme. It's just the legal entity that will be facilitating the implementation of these has changed. Again, with the cost reserve, this remains unchanged at 30 million, so there'll be no additional reserves expected to be required. Now, as George has mentioned, and as everyone is aware, there has been a delay to the timeline of the scheme implementation. However, the company and its advisors have been working proactively within the cost reserve, and it's forecast that there won't be the need to adhere, to gain anything further than the 30 million to fund the reoperation, like the business operations, and to fund the illiquid wallet and stolen wallet asset recoveries. Now, it's worth noting that the cost estimates were provided in the interest of transparency. The estimated costs for each usage category is subject to change. The forecast usage of the cost reserve is not a term of the scheme, but the scheme manager will oversee the usage of the cost reserve and ensure that this is put to the best use in the interest of the platform and scheme creditors. It's worth noting as well that as part of the transparency of the scheme, a cash report will be provided to scheme creditors every 3 months, similar to the recovery report. And then the details provided in that will include the cash position, the profit sharing computations, the cash reservation requirements for operational and capital expenditure, to ensure that you can see and have transparency over how the net shared surpluses are calculated for the recovery token purchase milestone events. Again, there's no change to the broker-related reserve. So, as mentioned in the 12th March scheme, a reserve has been set aside for broker platform users' claims and legal proceedings to defend those claims. So, a reserve has been set aside for the satisfy any contingency events against the company that one or more of the broker platform users have a proprietary right to any assets. Now, this is in the interest of scheme creditors because any financial difficulties of Zanmai India would negatively impact the scheme, especially now that Zanmai India will be facilitating the first distribution and resuming operations of the platform. So a proportion of obviously Zanmai India's profits will also be shared with scheme creditors to purchase the recovery tokens. And any financial issues for Zanmai India would compromise this ability. So, as mentioned previously, the reserve utilization is only there if there was a determination against the company around the broker's proprietary claims. So, if it's determined that the brokers are do not hold a proprietary claim, then this reserve would be returned to scheme creditors as part of a recovery token purchase event. Now, we'll just go through the estimated recoveries, which, as George has mentioned, there are no change to. So the proposed scheme will provide faster access to the first distribution within 10 business days of the scheme being effective. It will treat creditors equally, as all creditors will receive a proportional allocation of recoveries and distributions. It will provide future recoveries of liquid platform assets, and the business is well capitalized through the cost reserve to be able to undertake the recovery efforts needed. It will also provide for profit sharing, and it also provides for the market exposure and potential upside on the potential market-to-market gains on the stolen assets and the recovery tokens. And finally, obviously, the scheme is legally binding on all creditors, so it ensures transparency, trust, and accountability. Whereas the proposed alternative would likely result in a liquidation. However, this is uncertain, and there will be a large delay in the process given the ongoing disputes and confidential proceedings. So obviously this would be likely to be around September, October 2027, which is 2 years after the likely first distribution would be under the proposed scheme. It would likely result in a lower recovery to scheme creditors through higher liquidation costs. There'd be less effort, effectively, in recovery efforts due to the time delay and the funding required to be able to undertake those recovery efforts. It would also likely to result in lower recoveries, as there'd be no opportunity for future profits to be shared, as the platform would cease operations. The distributions would likely to be in fiat as well, so there'd be limited market exposure on the distributions, and there's limited say in liquidation. So a liquidator will run the process without being obligated to take creditor input, and you would not be receiving the cash reports and recovery reports every 3 months to understand what's going on. Now, as it says here in the box, the estimated recoveries through the scheme versus the liquidation are 100% in the scheme, with the net liquid platform asset first distribution of 85.5% versus the liquidation being 72.1%, which would also be delayed by 2 years. Now, there's a number of key assumptions that we've had to make when determining these recoveries, and it's worth noting that obviously the liability date is as at the ascertainment date, on the 18th of July 2024. All of the crypto assets and the forecast is assumed based on the valuation of the crypto as at the 17th of January 2025, being the rebalancing date. As we mentioned in the previous slide, the liquidation would likely result in much higher professional costs, whereas in the scheme we've already set aside the $30 million, which would is enough there to implement the scheme. There's obviously the illiquid wallet assets and the shared profits, which are likely to be there'll be no shared profits in the liquidation, and the liquid wallet asset recoveries would likely be significantly impaired in the liquidation. So there's no change to the recoveries, again, as we mentioned from the 12th March scheme. It's just worth noting that the significantly increased costs that would have to be incurred in the liquidation scenario, with significantly more professional fees, significantly more legal costs. There's likely to be some operational costs involved, and also it would require significantly more asset recovery costs, given the length of time that would have passed before this process could be implemented. Obviously, this is likely to result in a much lower first distribution, which would also be in 2 years' time rather than 10 business days after the scheme effective date. in the scheme. And then there'd also be no profits available for sharing under the liquidation scenario. So the total recoveries to scheme creditors would likely to be a lot lower. And then, as mentioned, this is the future profits would all factor into the US dollar recoveries. So in the scheme, we're effectively assuming a 100% recovery versus an 80% recovery in the base case. And the only thing that's changed in these recoveries is the estimated timing of the first distribution being September/October 2025 compared to September/October 2027. Now, as we've mentioned, it would be an 85.5% first distribution in the scheme, which would be 10 days after the scheme effective date, versus 72.1% of the first distribution, which we wouldn't know, and in terms of whether that be in fiat or crypto balances, and is likely to be delayed until September/October 2027. The scheme also provides for the scheme manager oversight, and creditors will receive the recovery reports quarterly from the scheme manager, whereas there'd be no opportunity for creditors to receive the quarterly reports and would not have the detailed insight as to the cash report or the recovery efforts being undertaken. George, I'll just hand back over to you.
Thanks, Mike. Okay, the next section governs the disclosures that are being made that are being made in the explanatory statement addendum. The court has directed 2 of the disclosures that are being made, and we have provided a third. Let's go through what the court has directed first. Basically, given the increased focus on Zanmai India and its involvement in the scheme, we are focusing. The court has asked for Zanmai's financial statements, both audited and unaudited, to be provided. So this has been provided. It's in the Appendix 4 for the audited account as at March 24, and Appendix 5 for the management accounts as at March 25. And this is inside the explanatory statement addendum, which has been sent to all creditors. We also have been directed to provide disclosure in respect of the rebalancing, the basis for the 17 January 2025 date as the reference token pricing. These were actually previously disclosed to the court in paragraph 72, the 83 of the 8th affidavit of Nishal Shetty, filed on 23rd of May. And this has been also provided in the body of the explanatory statement addendum, paragraph 4.3, and its subparagraphs. And on top of these 2 disclosures that the court has directed, the company has also disclosed legal proceedings involving Zanmai India and Zetai, Appendix 6 for Zanmai India and Appendix 7 for Zetai as at 23rd July 2025. Insofar as the legal proceedings are not confidential, which means that the ongoing dispute resolution process is not included inside because that is confidential. Let's move on to a bit more detail in respect of the 17 January reference date, because that's worth explaining, whereas the audited accounts and the list of legal proceedings, all of that is a bit more detailed, longer, and it's found in the appendices. Next slide, please, Mike. Okay, so this is a high-level explanation of why we use 17 January 2025 as the reference token date pricing for the rebalancing. It's worth noting that we have, after the rebalancing was complete, updated every scheme creditor's rebalance NLPA page or rebalance portfolio page to show the exact share of the rebalance NLPA tokens in the tokens that were rebalanced and allocated to them. These tokens remain unchanged. If the scheme is effective, creditors will still get those tokens in the first distribution, 10 business days after effective scheme date. This disclosure is not about the tokens themselves, but it is in respect of the basis of the valuation date as the reference token price date, 17 January, to govern the entire rebalancing. And this was previously explained to the court. I'll explain it again for all scheme creditors' benefit. Basically, the objective of rebalancing is to ultimately, at a high level, is to allocate the same proportion of value on the asset side, the token assets, as the underlying tokens that comprise the approved claims. So basically, at a very, very high level, if half the value of approved claims come from BTC, then half the value of your token assets at the date, the reference token price date for rebalancing needs to sit inside BTC on the token asset side, right? That's the idea. So, and the two objectives of the rebalancing to achieve that overall outcome are referred to as the proportion target and the variance target. So the proportion target is when the NLPA undergo conversion, so that the proportion of source token denominations of the NLPA match the proportion of source token denominations of the aggregate approved claims. And this is on an aggregate basis. Really, really importantly, it's not just like one or two tokens that match across assets and liabilities. It has to be all of them as far as possible, because without that overwhelming balance across all these tokens, you can't be said to have rebalanced. And then secondly, there's a variance target. As you know, cryptocurrency prices are highly volatile. There's a lot of movement day to day, hour to hour, minute to minute, second to second. It's important to have a static target for a reference token price date, and this allows the variance to be minimized so that the USD recovery rates on each token basis post rebalancing is minimized, so that we can confidently say that everyone's going to get plus minus 0.5% of the average target recovery of 85.5%. This ensures to the extent practicable and realistic that we're able to deliver what are known as pari passu or fair recoveries to everyone, without some creditors getting significantly more than others. So with those two objectives, let's just refer to the little table on the right side of the screen. It shows the 6 tranches in which the rebalancing was carried out: 1A and 1B in December 2024, tranche 2 in early January, and tranches 3A, B, and C in mid to late January and early February. So they have a column there that talks about the number of different token denominations traded out of about 347 tokens, and the value of tokens rebalanced in each of those tranches. And it would, on the face of it, appear that the most value of tokens was traded on 11 December 2024. Therefore, the 11 December 2024 is the right reference token price date for rebalancing. But that's not the way it works, because the way that a rebalancing can be said to have been completed and successful is that both the proportion target and the variance target have been achieved. In tranches 1A and 1B, the proportion target is not achieved because you have only traded 46 tokens and there are 347 tokens, which means that maybe, and I'm not saying that it is, 46 tokens are rebalanced. That leaves another 301 tokens that are unbalanced. Therefore, the proportion target has not been achieved. Right? It doesn't matter how much value has been traded then. The proportion target has not been achieved, and because of that, you can be sure that the variance target has also not been achieved. Then what about tranche 2 on 2nd January 25, where 304 tokens had been traded? At this stage, while 304 tokens may have been traded, it does not mean that both the proportion target and the variance target had been achieved, because at this point the variance target had not been achieved, and it required further tune up. Basically, the necessity for a third tranche of trading, which took 17 January as a target reference token price date, was commenced, where we traded the most number of tokens to date, 314. And as such, what this allowed us to do is substantially achieve both the proportion target and the variance target. At this point, about 90.5% of token denominations had been traded, and the variance target had been achieved in 162 out of 347 token denominations. This allowed us to do a further trim up on the remaining token denominations to bring the proportion target up to substantially 100% and variance target to where we had the initial target, plus minus 0.5%. And you will note that 3B and 3C had significantly smaller values of tokens rebalanced because this was a trim up. It's a true up to make sure that we were on target for the proportion target and the variance target using the 17 January 2025 prices as a reference token price date. The reason we use 17 January 2025 is because with that target, we were able to first achieve the proportion target and the variance target. And it is only using this fixed price date as a reference date can we target that fair recovery rate of 85.5% with a variance range of plus minus 0.5% to commit to what is substantially a pari passu and fair and equitable distribution to all scheme creditors, not just to one or two scheme creditors who get a lot where everyone else gets less. Everyone at that date will be allocated tokens that give them the same fair target recovery of 85.5% with a bit of variance there. Then we have received questions from creditors on why other dates can't be used. Basically, if you use another date, you're not going to be able to achieve the 85.5%. You're going to be off on the proportion target. You're going to be off on the variance target. This means that some creditors are going to get a lot more than other creditors, and that is not fair or equitable. All right. I think that's about it on the 17 January basis. Let's talk about voting because we are coming shortly to the commencement of voting in about 45 minutes time, and I'll step you through the process for voting with the aid of some screenshots. But let's start with the voting mechanism and the eligibility. We'll take it from the top left and move and follow along the progress of these boxes. So the eligibility to vote. So basically, only scheme creditors who have been determined by the independent assessor to have approved claims will be entitled to vote on this amended scheme. To be clear, there is no longer a dispute process in progress, mainly because that has already been carried out previously in the dispute and adjudication of dispute process administered by the independent assessor. If you had been able to vote previously and eligible to vote previously, you remain eligible to vote now. The voting mechanism is going to be substantially similar to what we saw before as well. Votes need to be submitted using the voting form on the KIS platform during the voting period, and any other submissions will be disregarded. Instructions on how to get to the voting platform will be forthcoming shortly. Now, voting structure and classing of creditors. All scheme creditors, just like the previous vote, will be voting in a single class for the amended scheme. And this includes all broker platform users. The voting will be open for 5 business days, commencing at 10 p.m. Singapore time, 7:30 p.m. IST today, 30th July 2025. Voting process is going to be largely similar. I'll go into it, and it's going to be substantially similar, actually, practically identical. Just so it's easy for people who have participated previously to come and participate again. We strongly urge you to. And after the vote is complete, the votes will go through verification again by the independent assessor, who will verify the results of the vote and generate a voting verification report, much like the previous time. And the outcome will be reported to scheme creditors. And if the amended scheme gets sufficient support above the voting thresholds, the company will apply to court for sanction of the amended scheme. Please note that if you had voted previously for the scheme, the 12 March scheme, you should come back and vote again on the amended scheme. Your votes for the previous scheme do not count in this revote process. Please come and vote. Every scheme creditor eligible to vote gets 1 vote in this revoting process. Please vote carefully. Please note that the vote submitted will be definitive, irrevocable, and cannot be changed or amended after submission. After submitting your vote, you will get an email confirmation from the KIS platform. Next slide, please, Mike. So I'll step you guys through the screenshots. Let's start on the left side of the screen. Firstly, you need to navigate to the scheme voting page. If you're using the WazirX website, please navigate to the funds page where you will see an action card, much like what you see on screen. It says revote is now live. If you click there, you can it will pop up that scheme voting page, pop up on the right side of the screen. But before we get to that, if you're on the WazirX mobile app, this action card will be on the home page and you can click it in the exact same way. Now for scheme voting page, that pops up. There's some detail in respect of the process, the involvement of the independent assessor. And there's a checkbox there where that you have to check to agree to share personal data, such as your registered name, your registered email, and account token balances with KIS and the IA solely for the purposes of the scheme process. And much like the previous voting process, this will be shared carefully, and your privacy will be preserved during the scheme process. You need to check that checkbox before you press the proceed button, which brings you to number 3, the KIS voting form. So it's at this point when you press the checkbox on the previous screen that the WazirX platform will perform a handshake with the KIS platform and trade on a highly secured basis the information required for the KIS platform to populate details in respect of your account balances. It may take a couple of seconds. Please be patient. Do not, if it takes, let's say more than 5 seconds, don't close the page, just let it go through and let it load. That's where it will pop up a disclaimer at the top of the KIS form, top left-hand corner of the screen. Please read this disclaimer carefully before scrolling down to verify your personal information. Things like your unique scheme creditor ID, your registered email address, your first name, your last name. Really importantly, on the right-hand side of the screen, what you will see when you scroll down further, the approved claim balance. This will show your claim amount in US dollars at the top, and it will show a breakdown of the underlying tokens in your WazirX account as at the ascertainment date, 18th July 2024. Right there, when you add it all up, it adds up to that claim amount. Next, please. Now, this is the key part, voting on the scheme. So if you scroll down further, you have an option to vote for or against the scheme. Check 1, please. If you want to vote for the scheme, check that first box. If you wish to vote against the scheme, check that second box. They are mutually exclusive. You can't check both boxes. And once you are happy with your choice, please read that last line. You will not be allowed to amend your form once submitted. Please review the form carefully before clicking on the submit button below. Once you're happy with your choice, click submit. At this point, you will receive a submission confirmation, which you can see on the bottom right-hand corner of the screen. It says, thank you for submitting the form. This message serves as confirmation that your vote submission was successful. You may now close the browser tab. That's all. That's all you need to do to participate in this revote. And we highly encourage all creditors to participate, particularly if you have previously participated. Your eligibility remains, and please note that the revote on the amended scheme is for a scheme that gives you the same commercial outcome as previously proposed, with some changes in the amendments made for our regulatory purposes and for further disclosures. None of these really affect what you see, what you receive in the first distribution, what you receive in further distribution. So you're highly encouraged to participate, even if and especially if you have voted previously. Please come back and support the scheme. It's only with your support that the company can get a successful and effective scheme of arrangement and progress with the first distribution. Okay, that is all for the slides. We now move into the Q&A discussion. And before we let individuals in from the waiting room, I just want to flag that you can continue to, if you're not able to participate or you don't want to participate live, you can feel free to contact WazirX team for general inquiries at WazirX. If you want to, if you are experiencing issues with the voting platform specifically, you can write to WazirX at is.chrome.com. That's the issuer services help desk, and they'll be able to help you with the voting related technical issues. Otherwise, WazirX team, why don't you let in a couple of creditors from the waiting room, and we can speak and you can ask questions.
Sure, George.
Mike, I reckon you can bring down the slides.
George, you are on mute.
You're on mute.
That was embarrassing. Thank you. We've got a few creditors in the room: Baljeet, Kudeep, Subhash, Manish, Saju, June. Why don't you unmute yourself one at a time and ask your questions? WazirX team, can we make sure that they are able to unmute?
Yeah, they are.
Hey, Baljeet, Kudeep, why don't you go ahead?
I want to know that how will be WazirX handle the liquidity issue when exchange start?
The
The selling
liquidity,
pressure will be there. Only seller will be there. No one will buy. So how will handle the situations?
Michelle, I think you've had some ideas on this, right? Do you want to give this one a shot?
Yeah,
Sure.
sure. Hey, Kuldeep. Look, I think the moment the platform starts, there will definitely be a period of time where, I would say people who want to buy would need to bring in INR or on the crypto to crypto platform, you can again just always swap between other cryptos. So there's no direct formula or a magical solution. We will definitely work with different liquidity providers who exist, and I would in general say that for most people that you should probably take a slower approach if liquidity is a concern. It's hard to say whether liquidity will be enough on day one, or will there be a period of ramp up, because it all depends on how many people actually decide to sell. And I think we there's no enough data to say what the first day trading would look like. So I would say in general, I would ask everyone to be a little cautious on immediately when the platform restarts. I think be a little cautious and look for or wait for liquidity to build up depending on the size of your portfolio. I'm sure it'll start slowly, and then as more people start coming in, the liquidity will build up. But yeah, I don't think immediately, if the idea is that as soon as it starts, you want to sell, I think you should be cautious when you do that.
And so may I ask the question?
Go on.
Yes,
Yeah, sure.
yes, Michelle. The question is like, how soon are we like expecting the scheme to be get like approved? Like once the customer states for the yes vote, and if the vote gets approved, then how soon are we getting? Are we expecting the exchange to get open? And what about the crypto withdrawals? We also like most of the customers are even having the doubts on like when are the crypto withdrawals going to get enabled on the exchanges? And like within how many days after the scheme has been approved? This is also the question. So could you please help me out with the clarity on that part as
Sure. I think
Yeah,
there are two parts.
Michelle,
Yeah,
yeah,
George,
let
you
me
want to?
take
Yeah.
let me take the scheme timelines part, and Michelle, you can talk a bit about the operational part. So we expect a realistic time frame to be completion of the first distribution and reactivation of withdrawals. In the case of an effective scheme, to be sometime in September or October. This is because of the court timeline. For even after the revote, after we verify the votes, we still need to apply to court, and the court needs to give creditors time to write in. We needs to give us time to respond to creditors, and also for a hearing, which is submitted to the court's schedule. Within 10 business days after an effective scheme, we will reactivate the first distributions and start allowing withdrawals. We think it is likely to be September or October, and we're doing everything that we can to make it September instead, and the faster the better. Now, in terms of the reactivation of withdrawals, Nishal, you want to provide a bit more on the thinking of the reactivation of crypto withdrawals, crypto conversions, INR withdrawals?
Yeah, sure. I think you spoke about that in the presentation as well, right? So we already have a certain number of tokens where previously withdrawals were open on chain, and those are the networks that you'll have withdrawals on. Um, and then there are tokens that are rapid listed, for example. Uh, those would not be, on-chain withdrawals won't be available on, let's say, at least not on day one. The objective with the rapid listed tokens has always been that over time, we'll integrate, the blockchains and they'll start. So they were always built for trading. So those will see. I think more or less when we restart, the idea is to start from where it was, and then over
Okay.
time build everything else. So
Okay.
the on-chain withdrawals that were available before, I think those would be supported, and the team's been working on that. Newer withdrawals of other chains, I think we don't have a ETA because we want to spend the first I would say the first few months ensuring that the platform operations normalize for everyone in terms of the liquidity question that you just heard. There's a lot of work on that, and ensuring that we can get the platform back to um, you know where it was, and then start working towards taking it and making it better. So I think these other chains, they'll take time, but the ones that were there before, that'll be there right from day one.
Okay. And Nishan, like once the scheme has been approved, let's say within 10 days, are the customers going to allow for the trading? As the
Yeah.
George said, like for the withdrawal, it would take like around September to October month. So for the trading, it would be immediate, right?
No, both. So as soon as the scheme becomes effective, which is
Okay.
if the voting is supported by majority,
Mhm.
we get a yes, majority yes, and then the court also approves it. Then and there's a point where the scheme is termed as being effective, and then there's a 10-day period before which we want to restart the platform. And when we
Okay.
say restart the platform, it involves your trading. It also involves the withdrawals. So both together.
Okay. Okay. Thanks, Nishan.
Yeah.
Hey, Mr. Yeah. So you said crypto withdrawals will be available for the tokens that we already have on the chain that is already supported, right? So I also read in one of the documents that it said users who have deposited INR after September 2022, right? They will not be allowed crypto withdrawals and they will have to convert their crypto into INR and then withdraw. So will there be a possibility for us, like users like me who have deposited INR, to go ahead and withdraw their crypto, or how does it work?
Yeah, see, I think you know, like I said, the first objective is to get back to where the platform was, and this if you're one of those who has deposited INR, you would realize that this was exactly how the platform operated before. So when we start, it'll be going back to that. Having said that, I think we've got requests from a few people about this very fact that what if they want to still withdraw? And I think while we can't promise, because it's a question of compliance, and there'll be further, maybe we'll have to do an enhanced due diligence, and it's not a automated process, the way, let's say, automated KYCs work or the first level of compliance works. That's automated and that's very straightforward. But for withdrawal enabling, I think we'll have to do an enhanced diligence, which is why we cannot commit to this. But having said that, I think if that's the intention, I would suggest you to reach out once the platform restarts to our support team, and I'm sure the team will help by ensuring that you would go through an enhanced diligence process, and if everything checks out, then they'll be able to probably open this up. But again, this is not a promise, because like I said, if it's a few people, it's easy. But when there's a lot of people, we'll have to be really careful about, because if you look at how the ecosystem is today, most exchanges do not, whoever is allowing INR deposits, they do not allow crypto withdrawals to everyone. It's always a selected portion, because it's a very manual process and it's time consuming, it's expensive. So I would not be able to commit on that. Having said that, it's not different from what it was when the platform was live before. So it's not like it's changing something. If you had the withdrawals before, you would continue to. If you don't have, like I said, you'll have to get in touch with the team, the support team, and probably they'll help you out.
Okay, all right. On
And
that,
and having said that, look, it's not like you have to sell it to INR and withdraw. You could continue to trade on the platform as well. You can continue to hold the assets on the platform. But yes, if the intention is to withdraw, and you want to withdraw in tokens, I would suggest that you write to the support team, and we will build out some process. But like I said, there's no guarantee or promise that it'll be definitely enabled. If the compliance team is finding this to be satisfactory, then that can be done.
all right. Yeah, thanks, Nischal. But yeah, just on that note, right? Like UnoCoin, right? Like, so I was in touch with the founder of UnoCoin also. So after this happened, I've also been in touch with the FIU, all right? And they said withdrawals are possible, but obviously there, as you said, there's more enhanced due diligence that has to be done. There's more KYC that we have to go through, right? Like a more detailed one. And UnoCoin actually has this system on their platform, right? Like they have this form that you could actually fill, it gets submitted automatically. And the guys actually send out an email saying that, okay, this has been approved and you can go ahead and withdraw it, right? So they are allowing deposits, INR deposits, as well as crypto withdrawals, right? And I also work for a crypto exchange, so I work for actually the AML KYC department. So I know what you're talking about. And yeah, it would be great if we could get that option, because, I think a lot of clients right now, a lot of WazirX clients, right? All of them are actually waiting for this one thing, because if they get it, I'm sure a lot of people are going to vote yes, because this is the only question on a lot of people's minds. And it's not about going away from WazirX, because I've been with WazirX since 2017 and I'll be with you guys like no matter what. But it's just about having self-custody and being safe, right? Like, because we all know what can happen, right? So that's all about it.
Right. No, I completely agree with you, Jude. And look, I think whether to use WazirX or not going forward, I think that's actually a secondary question, which is not the top of the mind for us. The primary question is, if people want withdrawals, how do we enable it? But since you understand the exchange ecosystem, now the size of WazirX is such that it's not easy to process these enhanced due diligence on a the sheer size of and the volume that we know we will get in. It'll not be easy to do it in a short period of time.
Yeah.
We'll do it as it comes. The other important thing is if we just open it, like hypothetically, let's say an exchange as large as WazirX just opens up this whole thing, which we did, prior to September 2022. In fact, I think of the large exchanges, we were one of the last ones, to implement something like this. We were very reluctant, but we faced, trouble with the way things were progressing in terms of all these various, any the smallest of issues with anything with bank deposits used to lead to a bank freeze for us, or a freeze on our amounts that are held. Even for, like, let's say 1,000 rupees, there's some issue with 1,000 rupees, and we have like a 10 crore in the bank. Sometimes a whole 10 crore gets frozen, and then there's a long process to get it unfrozen, and that affects everyone else. So it was, this was the biggest reason to go this route. And we did it I think in 2022. But we've always been working towards how do we enable this, and this work started back then. And we do have people where, based on the diligence that we are able to do, we do open it up. But unfortunately, it's a very time-consuming process. So just by our size, we've not been able to do it for everyone. But yeah, the intention is to continue to do it. And I think anyone who wants to self-custody or even take it to any other exchange, I think we will try our best to make that happen. It's just that we cannot promise this or commit to a timeline, because, like I said, it's not an automated process, and we don't want that to be a hindrance to restarting the platform, so that the ones who have the withdrawals, they can withdraw. The ones who want to continue to trade, they can trade, and the ones who want to convert into INR can do it. So maybe a step 2 we will do it, but as a step 1, and what's the fastest way, because that's what we've heard from maximum people, which is how soon can you restart this, because there's a portion of people who want to withdraw. There's a large portion of people who also want to start trading now that the markets have gotten better, and a lot of people believe that the rest of this year is a very good year for crypto. So I think the objective has been, let's restart as soon as possible, and then we will definitely work on all of these aspects also. If you've been with WazirX, you'll realize that we've always heard what people wanted, and we've always tried to build towards that. And that's not changing. Despite all of this thing, our intention will always be that, build for what people want, and we'll continue to do that.
Yeah. All right. Thanks, Mr. Thank you so much.
Thanks, Jude.
Saju or Manish, you want to ask a question?
Hi, good evening, George. Good evening, Nishchal. Good evening, all of you. Manish this side.
Hey, Manish.
Yeah. So, Nishchal, my question is the same, since it has been answered by you, I understand, but I don't have any questions. I was supporting this scheme earlier. I will support it, and I will support your team. But the whole problem that I have is I need emergency withdrawal to my assets. I have some debts pending, and I don't have funds left to continue paying off my bills. So after the platform restarts, once the scheme gets sanctioned by the court, which you are saying that would happen by tentatively in September, most likely, and you have just said that there is no you should avoid selling it into INR, those assets, because there would be very liquidity issue would be there on the platform. There would be very unfair prices at the time of selling of those assets. So in that scenario, I would be suffering more losses, as we have been affected with the attack, and we have been facing all of this for the past 1 year for our remaining assets. So in that scenario, I wish that I would have been getting my crypto withdrawals. And this was the matter that I raised with you and George every time when I kept contacted with you in these town halls. You assured us that we will be getting it, and we always supported you. My concern is I had deposited nearly half of my assets in 2020, and I added further some of the asset half of the assets I added in I think 2024, and those were all INR deposits only. Those were all purchased using INR. But like after I voted for the scheme and you filed a like supplementary affidavit, in your eighth affidavit you added a clause of like that uh, in the paragraph number 64 that we are INR onboarded creditors and we won't be allowed to withdraw fully or like partially on that matter. So due to this, I feel struck. I have been struck for the past 1 year. I'm suffering a lot despite supporting the process throughout, but I don't like want to continue all these sufferings and I want to get out. I want to move my assets to my hardware wallet or like sell them at a better price. Like I don't want to sell them at bearing more losses. So is there any solution that you have? Like I also tried WazirX and Unocoin as Jude told you. They are offering enhanced KYC based like withdrawals to like the stable tokens. I hold stable tokens in my portfolio, and I have these problems that I want solution from you on. And you were telling that you will be addressing these issues, and these are real issues, and we are impacted by the hack, and we don't want to get impacted further by some regulatory or compliance issues that you just mentioned. You please need to figure out some sort of solution to this, so that we also like get addressed and we also come out of the problems. So, do you have any plan on that,
Absolutely.
or can you promise something on that?
So look, Manish, like I said, right, this, there is yet not an automation. Even the examples that you gave, everyone does, enhanced due diligence, and that's a fairly manual process. And which is why, and it all depends how many people are going to come on day one, day two, day three. Um, but like I said, I would strongly suggest you to get in touch with support and specifically, ask for this, and we will instruct the teams to try to work on this. We cannot promise anyone, who's part of this whole INR onboarded flow, simply because, there is a risk to, um, and we faced this issue before. If you look at the past also, there have been instances where our bank accounts have been frozen because of someone depositing, withdrawing the crypto out, and then the funds get frozen in the bank account that we hold. So it's a it's not a very straightforward problem to solve, and which is why I think we have to take a manual approach. Having said that, this is not something new. This was always the case before, and that's how it will be when we restart. Because anything else will mean building, and building will take time. So this is definitely something to build. Um, and in that time, when we build this, is where I'm saying that you get in touch with support, and support will help you out. There will be, some requirements from the compliance team. Maybe send that across, and we'll get this done. But I cannot promise that to anyone, because it all depends on the documents that you submit, the questions that are asked. And we cannot even detail out what the compliance processes would be. It's all more internal. There's a lot of parameters they might want to look into. So as long as you're able to get that done, and the compliance team feels that this is fine, I think we should be able to do something about that. The withdrawals for the people who have deposited INR after September, or I don't remember exactly, but since 2022, I think this came into the platform. But yes, I think it's definitely the intention, Manish. And having said that, look, day one liquidity might be low, but you know, our objective is to make the platform better, so that the liquidity comes in. And we were one of the highly liquid INR platforms in India. Um, it's unfortunate what has happened, but as a team, the objective is to keep building and keep providing the best services for everyone, and we'll do that. But I understand that's maybe you don't want to wait, you don't want to hold on the platform, and I think that's perfectly fine. It's understandable. So just get in touch with the support team. We'll definitely make sure that we can do something about that. And thank you so much for supporting, Manish. I've been reading your emails as well. Thanks a lot for the support, and I think it's a valid ask. What you're asking for, it's just that the way things work, and the efforts, the manual efforts required in this is something that we cannot outright be committing to it, but we will try our best to see what we can do.
I understand, Nishal, the whole compliance process, and I really agree with you on that. But it's just a humble request that if, in case these crypto withdrawals are not available due to compliance and other regulatory things, just is there any possibility that you can handle the liquidity issue so that we can get better approaches? Because in your affidavit, I think it was mentioned that only 7 to 10% of the creditors of the total creditors were INR onboarded creditors. So in that scenario, even if that's a big amount, I think even if those assets are now valued at $540 million, it would be around 54 or 6, like let's say 50 to 60 million dollars, and that turns out around I think 4 or 500 crores. That's not a small amount, I understand, but if that's possible, can you flush that amount in your exchange so that for the persons like me who need an immediate withdrawal, so our demands can be addressed? And one question I also want to ask to that, that would be my last question, that in the time of January when the rebalancing calculator was live and the bull markets were there, before all the markets fell down and then restarted to rise, I was getting a much better amount in my rebalancing calculator. Even though it was not an accurate amount, I can understand that my tokens were not locked at that time, but I was getting a fairly high amount in my portfolio. But now what I'm seeing is still far lower than what was actually there in the month of January. So what do you think that why this is happening and how we will address this problem? Because my portfolio is still way down than what it was in January. Is it due to the markets
So
or is it due to the rebalancing costs that were incurred, or why this is happening? There is
no,
a huge amount of difference.
no.
Maybe
So
let me take that one, Nishal.
yeah, but just to understand the question, you're talking about before the rebalancing happened, when you're talking about before the rebalancing happened, the portfolio that you were seeing,
Yeah,
or immediately after the rebalancing.
yeah. Before before the rebalancing was complete, it was around 17 or 20th January. I was seeing a higher amount, and when the tokens were locked by your team, I think in the month of February, I was getting a way lower amount, and then it inflated. But still, even when the markets have inflated by 20 to 30% from the price that were there in January, my portfolio is way lower than actually it was showing in January. That is my concern. So this is my second query, and the first one was regarding the liquidity. So I just need answers from both of you if you can provide, George and Nishal. Please help on that.
Yeah, maybe let me address the rebalancing point, and Nishal can jump in on the liquidity point. So, Manish, that rebalancing calculator was intended to give a high level overview, right? As simple as we can get it, to let creditors understand what a rebalancing is fundamentally. It effectively represents the absolute perfect scenario in a rebalancing. Basically, you press a button, everything transacts at one shot at one set of prices instantaneously across all tokens, and that is not possible in the real world, because as you know, in order to transact, you need liquidity, you need a willing buyer, and you need a willing seller, right? And this is not possible across all tokens. It's simply not, especially with the 347 tokens. Many of them are thinly traded. Many of them you've got a good number of highly liquid mainstream token denominations, right? BTC, ETH, XRP, stable coins, all of that can be traded readily, but there are hundreds of tokens that are very thinly traded, altcoins that are not supported in many sources in many liquidity pools. These tokens that will encounter in such a large scale rebalancing. So best case scenario, utter ideal world, you press a button, you get what you see on the rebalancing calculator. That has never been possible. The rebalancing calculator is just an indicative view of how a rebalancing worked in general. The actual execution, significantly more challenging, and I went into a bit of detail on the different tranches that it took, right? So I think ultimately that the level of involvement was significantly higher, and the rebalancing was guided by that. Well, it was guided by that 17th January for the ultimate proportion and variance targets. It was carried out over a sustained period of time, right, in different tranches, as you can see. But I think that's probably the best way of explaining it. We did use the 17th January as the ultimate target price, so that we can level everyone else off that. But I think it's just inefficiencies of the market, inefficiencies in the ability to trade highly illiquid tokens within the token portfolio. And that's not that's not the fault of anyone. It's not the execution that was an issue. It just is because it's a reality of crypto in which many tokens are altcoins that are thinly traded, low interest. And these have to be addressed. And it just takes longer for these to be addressed over time as opposed to at one shot. So Nisha, I'm not sure you have anything else to jump in on that. Otherwise, we can move to your liquidity answer.
Yeah, I think liquidity, yeah, we spoke about it before as well. It will take, there'll be a ramp up period, and we will try our best. We'll also be getting in touch with any of the liquidity providers that exist for the India market. We also, I think we'll also work on at least the crypto to crypto liquidity is easier. The challenge is more on the crypto to INR. So one way would be maybe, for you also, Manish, is convert to USDT and probably then, try to convert into INR from there. So at least for the crypto tokens, I think that liquidity is easier because you can also pull in liquidity from international exchanges, other exchanges, and all. The INR part is more tricky, and it's a function of the Indian market, which is still nascent and still being built out. So I think the better way, if you think about it on day one, is try to convert to USDT the tokens which you want to liquidate, and probably from there wait a bit. I think the USDT INR market will probably get liquidity faster compared to the other INR pairs. So I think that's a far better approach if there's urgency to liquidate.
Okay, Nishal, got your point, and thank you so much for addressing my concerns. I just want to tell you and like everyone else that we are there. Just we request you that this time please get the scheme sanctioned. Though don't make or miss out any point that get like that leads to any hurdles or any delays this time, because we are suffering for a longer time, and this prolonged suffering we cannot sustain longer. So we wish that
Yes,
I'll just vote again in the favor of the scheme. I just hope that this time you will get the things done much faster, and this time there won't be any hurdles from getting it sanctioned from the court. And I think that you will think about us also, Nishal, that at least provide us a solution in order to give some crypto withdrawals or adding some more liquidity. I will follow what you just mentioned. Just think more about us, and we'll. I have been raising this issue with the support team. I just hope that there are some further help to us, like those who need urgent withdrawals, and we also get the fair price to remaining tokens that we have in our portfolio. So thank
absolutely,
you for
absolutely,
addressing my
Manish.
concern.
Thank
Yeah,
you so much for supporting, and we'll try our best to get this done as soon as we can. There's just some code processes that are time bound, but on our end, we'll try to expedite from a liquidity point of view again. Like I said, I think the crypto to crypto part is something that we can do way sooner. The crypto to INR is where I think our focus will be first USDT INR and then the rest of the markets. But yes, and it's only all of you that we're thinking about, and we'll try our best to get things done as soon as possible for all of you, and we'll continue to work even from there. That's our objective, is that we are here to build for all of you, and thank you so much for supporting.
Thanks, Manish. We're coming very close to the end of the session. I think we have time for at least one more question. Saju Sam Thomas, you have your hand up. Do you want to ask your question?
Yes. Hey, everyone. A very good evening. Good to see that if the credit health vote is approved and the court permits WazirX could be back in action. So, yeah, I have been a part of this WazirX journey since 2018-19, I believe, and have been first and now. Vishal and the team has promoted the blockchain and the crypto adoption in India. It has been an important journey for the entire community during the time, and till I'm seeing that one. And also, as a longer user and a stakeholder, I have a few questions and concerns regarding that restart plan and the future direction. The very first one, it's about a restart strategy. So what are the overall plans for restarting WazirX operations? What steps are being taken ensure a smooth transition? In that, I would like to know, we have support team. So is that so when it restarts, is going to a new executing with a new support team, and what about the security and other? So I'd like to know about the restart strategy and this question as well. So then after get the answer, I will move forward other questions as well.
Sure, Sarju. I think the restart plan, the immediate goal is to ensure that when we restart, the platform is back to how it was operationally for you, which means you'll be able to trade, you'll be able to deposit, you'll be able to withdraw. New users will be able to sign up. Support will function, the way it used to function. In fact, support has been active even now during this period. And we've been getting tens of thousands of support queries all along this whole journey, and the support team has been very active in responding. So it's all going to be the way it was, and then the objectives from there. What can we do to make the platform better, and to make things easier for everyone in terms of the people who want to withdraw, how do you enable more chains? The people who want to trade, how do you increase the liquidity? The people who want to, let's say, they're expecting new features, how do we build the new features? So all of those would be the second step after we are able to restart. So the focus is at restart, bring back the platform the way it was before, and then from there you go forward. In terms of security, I think especially after this incident where the infrastructure that we were using, and the wallet services that we were using was a point of attack. One of the things that we've done is we've moved all of the cold wallets to BitGo and Zodia. These are two of the largest, I think, names in the industry. And the idea is, and some of these things are, we've been doing, like, for example, BitGo, we've been actively custodying since several months now, and we've set up the processes and everything on that. And that comes from the learning of, what happened. I think the objective is to keep the cold wallets, continue to keep them with these large service providers, and work on the trading and the hot wallet aspects, and minimize the amount of tokens that you keep in your hot wallets. Keep them at a minimum. So that's the objective, and then security audits, all of these things are the other things that the team has already started working towards. So, but it's an ongoing journey. You learn from what has happened, you get better, and that's how the industry also moves forward. So that's our objective.
Got it. So during before this this unfortunate this attack happened. I mean, before that, I had shared many feedbacks with the support team about some features. I need to go through that email. That feedback will consider for when restructuring. Will those feedbacks from the customer will that considered?
Yeah, absolutely. In fact, I think we have a list of some of the most asked for features, and based on these priorities is how we are going to build and develop the platform for all of you. So anything that's written to the team, right? It always bubbles up in terms of feedback to requests that come in, and based on the number of requests we get, we prioritize our feature development. So we'll continue to do it that way.
Good to know that. Yeah. And also the second question is that about the platform stability on the relaunch. Why I'm asking that, say on user activity on the very first day one, especially with the potential withdrawals and the sell orders you are expecting. And is the platform infrastructure ready to handle the traffic? What measures are in place of prevent that server overload or crashes?
Yeah, see, I think while I can't, tell you like it's 100% thing, because it all depends on the load. Having said that, I think we've had experiences with heavy load. We've had intermittent downtimes during those growing periods, especially in the 2020, 2021 cycle, which was much larger, much larger than, let's say, the cycle that's going on this time. So there's a lot of those learning. There's a lot of infrastructure work that was done back then. And I think we can assume that that kind of load we've learned how to deal with. Definitely the industry will grow, and that load, what you saw in 2020, I think it'll be eclipsed in the next super cycle whenever that happens. But that's a learning journey. At least for this, looking at the market conditions right now and this restart, I think we'll be fairly well equipped to handle this. And the other thing is the platform. Even now, we are seeing a lot of people coming in every day to check their like the rebalance portfolio, to check in on any updates and stuff. So it's an ongoing thing. Even now, the servers are running, and people are logging in now for the voting, for example. You will again be using the platform. So it's not like it's been shut down and then we have to restart the servers or something. The servers have all been operational, because the app also you can see everything. It's just that the trading and the withdrawals, all of those were paused. So we'll just have to restart those.
Got it. Yeah, I got it. And the next question is related to the first distribution and second distribution. So when it comes to the first distribution of assets to the creditors, be a fixed amount, or could it varies once operation resume?
I did not understand
about
that part
the
of the
first
question, Salu.
about the first distribution, when about the, for assets, now there is a rebalanced portfolio we having, right? So why I'm asking, one is resume, is that the same for distribution? Is the same
Yes.
amount will be distributed, or could it vary once the operation resume? That's my question.
No. So yeah. So if you go into the app, you'll see I think the rebalanced portfolio. If you open that, you will see the tokens, and all of those tokens will be the ones that are part of the first distribution. So I think there's also some confusion on the term first distribution, because that's more like, in the scheme it's termed that way. But the tokens that you see in the rebalance portfolio are the tokens that will be available when the platform restarts.
Actually, about the distribution, Manish already asked from his last question. I about to ask that one also. Before executing the rebalanced, before executing, it was showing different, and after executing that, it's reduced. Actually, the percentage of each coin is reduced. Before it was showing much higher. So Manish already addressed that question. It's not about liquidated, it's about the quantity of each coin. So the percentage was increased before executing by WazirX. So yeah, that one also, it's already addressed by, I thought not to ask that one, but why it happened, before executing that one. It's that kind of variation.
Yes, I think that's what George answered. I think the quick answer is that it's a factor of the amount of time and effort that took to rebalance eventually, like to do the real actual rebalancing, and the liquidity that was available for different tokens, because we had 300 plus tokens. So there's a lot of variance in the liquidity. On let's say you have to sell X amount of token 1 to get Y amount of token 2. And when we initially showed you, it was without this actual change, right? That was before rebalancing. But when you actually do a rebalancing, there is always slippage, because sometimes you don't get the exact amount of the other token. You need to sometimes sell it for USDT, then USDT again. When you trade normally also, let's say you got Bitcoin and you want to swap it for Ethereum. Sometimes you can do it directly and there's liquidity. Otherwise, you need to then sell it for USDT and then from USDT again buy Ethereum. So that's like multiple hops. And that, gets even more difficult when there are low liquidity tokens. Because when you sell it to USDT, you're getting lesser. And then when you're buying another low liquidity token from USDT, you're paying a higher price. So all of these fluctuations is what led to, the post rebalancing, whatever changes that you saw. But after that, the tokens have been locked, and whatever that you see, and any price variation is all to your particular portfolio.
Got it. Yeah, thanks for thanks for that clarification. And about the second distribution, what is the proposed plan for the second phase of asset distribution? What's the timeline and the structure decided from the from the WazirX side?
Sure,
Yeah.
sure. George, you want to add
Yeah,
anything? Yeah.
I'll take that one. Saju, the first distribution is being made by deposit into your WazirX accounts and then allowing withdrawals of the rebalance and LPA, right? Your allocation of it. Subsequent distributions after that will be facilitated not in this way. Instead, you will get you and every other scheme creditor will get your pro rata share of the recovery tokens, which will be issued by the calculated by the company and issued by the token issuer. And then basically, whenever the business has net profits to share, it has made recovery of stolen assets, all of that will be used to buy back the recovery tokens from you. So by buying back the recovery tokens from you, we extinguish some of the circulating supply of the recovery tokens, and using the recoveries to buy back, that goes into your pocket, that goes into your wallet, into all scheme creditors' wallets. And that is the mechanism for subsequent distributions. Now, when are the subsequent distributions going to happen? That is entirely contingent on the build-up of the net profits that can be shared and the recovered stolen assets. We don't have an estimate for you right now. We are working hard on it. The faster the platform spins back up and reactivates and builds volume and is able to reactivate the trading business, make a profit, introduce new revenue initiatives. All of that helps speed up the profit generation timeline. And once we are properly into an effective scheme, we'll be able to aggressively progress the recovery efforts, and that also shortens the timeline to a second distribution.
Okay, and so related to that, how in the income tax in India, so when you for a recovery that coins, right? So in when we are filing for a ITR in India, how we are that's a legal and a CA question. So will you be able to answer how we need to file that ITR in India for a next year? So would you be able to answer Nishal or any CA or legal advisor there?
So yes, I think at this point we won't be able to answer, Saju, but that's I think something we definitely want to look at. That's I think when we have clarity on that, we'll probably also put out some help articles around it. I think we've not gone to that stage right now in terms of the deeper details of that. But I hear you. I completely understand the direction of the question that you're asking. But I think we also need to get some opinion on that and completely understand how to even structure it in the right way. So, but yeah, I think it's a step two, and we'll get to that. But again, ultimately, it's a question for you to check with your CAs. But we've traditionally always tried to shed how much ever info we can on these kind of things, and we'll continue to do that.
Okay. Okay, and a few more questions. I'm so sorry to trouble everyone too much taking time. And also, what's the role of Zenmai Labs, in post restart phase, and what all involvement in operation support development going forward?
Yeah, so I think if you see before, Zenmai was involved with the INR part of the platform. Now, because of the change, the FSM Act in Singapore, the crypto part will also be handled by Zenmai. So the crypto trading and the crypto withdrawals will also be handled by the India company.
Okay, okay. And this is my personal question actually. What's the future of the WRX token? Because I'm also one of the investor in WRX coin, because since it started listed in the exchange. And so what's the future outlook for the WRX coin?
Look, I think that's something again, something for like a phase two. Over time, we'll have to figure this out, because you've seen what has happened, right? With the delisting that was done, and some of these things. But I think for us, we've been focused on how do we get to a restart and how do we make sure the funds are available first. But yes, that's again something to work on. And if you have any feedback, any suggestions, let us know. But first we want to restart and then work towards that also. But I get the concern, and that's something that we will have to work on.
Correct, got it. And the final question, if it's about the mass withdrawals or sell-off, how you going to handle? I mean, if it's a large number of creditors we have in the WazirX, choose to sell or withdraw. Suppose the scenario, we are expecting that because it's unexpected, unfortunate happened. Withdraw the assets immediately after restart. How the platform going to handle that liquidity and operation pressure? What are the plans for the same?
Right. So I think, and there are two aspects, right? The INR liquidity will take some time, and the crypto liquidity is much more I would say straightforward, because there's global liquidity available on that, and we can work on that part. The INR part takes some time, and I would say if the objective is to, let's say, liquidate the tokens or a part of the tokens for whatever the requirements are that you might have, first try to get it converted to USDT, and that should be good enough liquidity there. And then the USDT to INR is where I think some patience for a couple of days, or I don't know how long, because it's hard to predict once we restart. But I think USDT INR will the liquidity will build up faster. So probably exchanging, like swapping the tokens to USDT in the crypto to crypto markets, and then moving that to INR for whatever tokens you want to withdraw or liquidate to INR. I think that's a good path. And if you have withdrawals open, then you can anyways directly withdraw them on chain.
Yeah, that answer already. You answered before, but my question is how you handle the pressure as a team. That pressure will be there, right? So how you handle that pressure? I mean, because it might be expecting that the withdrawals, everything, right? So that affects the platform, and also the people will be panic, already panic. But now after the seeing that everyone is withdrawing, and also after seeing that people also panic, right? So how you will handle that pressure? That might intention of that question.
Yeah, see, I think one thing is, if the scheme becomes effective, we'll have the liquid the tokens to back all of these balances. So it doesn't matter how many people want to withdraw. There are tokens that are available for that. So it's just about processing it, and we've seen a large amount of withdrawals before. Like I said, during the bull markets and all. So I think it should be possible to handle this. We've been running the platform for several years, so I think we get it. But again, like I said, there's always that 4 to 5% uncertainty, right? And we'll have to learn it as it happens. But otherwise, fairly the calculations we've made and the understanding we've had, I think we are positioned to be able to handle the withdrawals or the trading, all of those things.
Definitely, yeah, as a team, definitely we will come back soon. Yeah, I hope I wish
Thanks.
everyone to very best, and also we'll wait for a voting scheme and the court approval also. We'll wait for that as a WazirX team. I wish you all the best, and yeah, unfortunately we can't change that past, right? So we'll move. We will. Yeah, we will. We need to carry on, and also, yeah, we should learn from that what happened in the past also. Yeah, we wish you all the best, and yeah, I hope we can
Thanks.
come back. Yeah.
Thanks,
Yeah.
Aju. Yes, and I think the voting has already started now. And I really, I would say I would request everyone to go and vote. And if we are able to get a majority yes, we'll be able to then work towards a restart. And while we cannot change the past, like Saju rightly said, the objective is to ensure that we can work towards building a better future for everyone who's involved here, and we want to work on recoveries. So that's where our mindset is, like how do we work on recoveries going forward, and we'll try our best to make that happen. Yeah, George.
But not much more I can say to add on top of that, Nisha. Thank you everyone for your time and attention. We have come to the end of this third online webinar, 9 Town Hall. voting has opened as of 19 minutes ago. Please go and exercise your right to vote. To creditors who have not been able to ask your questions live, please don't hesitate to email the WazirX team, or you can email me directly to ask your questions. I'm happy to hop on a call with you. Just a quick chat. If you want to correspond via email, that's fine as well. We're here to answer your questions. And thank you for your support. As always, please, you are strongly urged to participate in the voting, support the scheme, the amended scheme, so that we can get a scheme sanctioned and effective as quickly as possible, and reactivate the first distribution, and let creditors have access to withdrawals and trading once again. Thank you, everyone. Have a good night.